You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. You wanted it, you got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Bootcamp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, the Options Bootcamp drill instructors will break it all down for you. Options Bootcamp is brought to you by NASDAQ. From its inception, NASDAQ has been an innovator and agent of change in the financial markets. It's in our DNA. From the development of electronic trading to our drive to bring enhanced functionality and world-leading technology to our suite of 6 options exchanges, we exemplify customer focus, consistent technology, and streamlined solutions. NASDAQ, tech forward, leading the U.S. options market and continually rewriting tomorrow. Now, let's get you into peak options trading shape. Here are your Options Bootcamp drill instructors, Mark Longo, Dan Passarelli, and Jill Malandrino.
All right, everybody. That music means it's time once again for Options Bootcamp. Hope you guys are liking this new weekly 30-minute format. We like bringing the show to you. Glad to see you guys are responding. By the way, if you're liking what you're hearing, make sure you go out to whatever platform you're listening to this on and keep leaving those reviews. New people are discovering this show all the time. I can't think of another time when folks need a show like Options Bootcamp more. They're confused about volatility. They're confused about what's going on in the marketplace. They have some very basic questions. This show is a great way for them to learn at their own pace on their own time. So make sure, wherever you listen to this, leave that review so folks can continue to discover it. And of course, keep those questions coming. We do love to hear from you guys. We're going to get to a lot of them. In fact, pretty much the entire show is going to be devoted to you guys. I am, of course, Mark Longo from theoptionsinsider.com, as well as from this fine network upon which you are listening to this right now. And I'm not alone in answering your questions today. No. First off, I am joined once again by the black-hatted one, my cohort here in the world of Options Bootcampery, a.k.a. Mr. Dan Passarelli from Market Taker Mentoring, also the author of a few options tomes out there, like Trading Options Greeks. Mr. Dan, welcome back to the Options Bootcamp Drill Instructor Training Ground, sir.
Always good to be back here, Mark.
Good to have you back. And also joining us, he's going to borrow a hat. Maybe we'll give him a gray hat today. We are joined once again by Luke RAHBARI, the CEO over there at Equity Armor Investments. Luke, welcome back to Options Bootcamp. It has been too long, sir.
Thanks, Mark. Glad to be here.
All right, everybody. It's an episode entirely devoted to you guys, so let's get to it with a little bit of your own mail call.
Mail call. Time to look at questions submitted by our listeners.
All right, everybody, welcome to the mail call. You guys know the drill. You guys send us your questions. We answer as many as we can here on the program. You guys, as you might imagine, have been inundating us with some cues. Let's see how many let's kick things off with a little bit of love out there. A few of you out there were chiming in. Apparently there was a big options thread going out. Some folks, I think it was Tim Ferriss, was asking for some options education tips. And a lot of you were out there recommending Options Bootcamp to him. So I want to thank you guys for doing that. One of them was Court Trader. He said, I second the nomination for Options Bootcamp. Start from episode 1 and knock yourself out. Yeah, I couldn't have said it better myself. this pretty much is a show that's designed for you guys to learn at your own pace. If you go all the way back to episode 1, might be a fun little time capsule too, where you do it with some firms that aren't really around anymore. So that's kind of fun as well. But the concepts are all there. The notions, the strategies, the things we're going to discuss on this show are effectively evergreen. So you can go back, learn at your own pace. And if you have questions, tune into the most recent episodes or join us on the live chat. Live folks always get bumped to the top of the list, and you can ask them there directly. We also had Senecal Capital chiming in as well, saying, as a 40-year veteran of the SIBO and independent investment advisor using options, said we have the finest collection of education curated from real world forged in the trading pit, hyphen, risk their own capital traders. Anything else is armchair quarterbacks. Well, thank you for that, Bill, and everybody else who chimed in and who has been sharing the love about the program, not just here, but on all their social media platforms or on the various platforms where you listen to this show. We're glad you like it. We're glad it's serving a purpose for you. And hopefully, at the very least, we can keep you informed, maybe a little bit less worried, and maybe give you a break from the rest of the family that you're trapped with at home for a little bit here. So that's our goal here. Hopefully we're doing just that. We got more questions here. Jeff Westmoreland. He says, as I am new to options, I love our audience. They write so nicely, so polite. As I am new to options, what is a good strategy for knowing the best time to sell a profitable in the money call option? Obviously, if I believe the equity price will continue to rise, it may be good to continue to hold the call option. But at the same time, you are losing extrinsic time value on the option. Do you have a strategy to catch the optimum time to sell, and he puts in parentheses, or close a call option as the call option's intrinsic value is going up, but the time-related extrinsic value is going down? Any advice or direction is appreciated. Thank you, Jeff. If you're confused about those terms, listeners, intrinsic, extrinsic value, again, go back to the archives of this program, start at episode 1, work your way through. By the time you get here, you should have a decent handle of what Jeff is asking for. Maybe, Luke, we'll start with you as our guest. You get pride of place here, sir. Jeff's asking a question a lot of people have. They bought a call. In this case, it sounds like it's working out for him, but he's not sure when to pull the trigger on closing that. Do you have any words of wisdom for Jeff and everyone else out there, Luke?
Yeah, I've got a couple. It's good that he bought the call and it's in the money now. He's making some money on it. But I think you always have to have an entry and an exit point before the trade, right? So was there a certain return he was looking to get from that call? What does he think about the company? Some of that stuff. And also, the exit point also means how much of a loss can you take? So before you get into a trade, you should have all those. This is how much of a loss I'm willing to take. This is how much of a gain I'm willing to take. Maybe I'll cut the trade in half. Maybe if I bought a 10 lot, I'll sell 5 now that it's higher and let the rest run, or the other way around. I'll buy back 5 now that I've taken a little bit of a loss, but I'll stick with the trade. It's hard to know when to sell that in the money call because basically you're just synthetically saying, when should I sell the stock? So if you're not sure, why don't you add another call to that? Why don't you sell an out of the money call now? And now you have the call spread. And now you're going to collect some premium on that out of the money call. And if you were right and the market stays here, then you get that gain. If it goes through your strike, even better, your second call that you sold. And if it goes down, at least you sold another out of the money call and you get some money out of it. So if you're not sure, just use another option and make it into a call spread. That's what I would do.
Always a good strategy. Take a little bit off the table, but you still got that position. If it goes back against you, at least you got a little bit of that back. Dan, same question for you. I'm sure you've gotten this question quite a few times from your clients over there at Market Taker. They come into you, they bought a call. Seems like it's working out, but maybe not all the way, or maybe they're a little nervous. What do you usually counsel them in those scenarios, sir?
Yeah, man, Luke took the words right from my mouth on that one. I will tell you what, having a bad plan is way better than having no plan. If you set a profit target and a loss target before you actually enter the trade, or to be fair, probably right after you enter it, your chances of being profitable are way better than if you just wait for that perfect opportunity to show up and you just know that it's the right time to do it, So I mean, you're always going to leave money on the table. You're never going to be selling the high of the day. You know, you're never going to be getting the maximum profit on your trade. If you're shooting for that scenario, you know, you're doing it wrong. That's not your job. Your job is to consistently take money out of the market, not to, you know, to have maximum profits every time or anything like that. So
some might say you want to be a market taker. Let's see. Brian has got an interesting one. Brian Collymore, I believe he's a long-time listener, as I do believe that name sounds familiar. He says, "Hi, gents." Hello, Brian. Maybe he's from England. Brian wants to know, in my Roth, I'm long a couple of 300, 305 call spreads in SPY. One is on the June 19th, so ex-div date, with the $1.40 dividend. He's got a lot of detail for us. I like it. June, so the June expiration, effectively. The other is the September expiration. So he bought these during those 10% down days. I couldn't resist. Anyhow, as I'm now short some calls, will I be on the hook for dividends should these 300 calls go in the money? So if the short calls do go at the money, in the money, I need to look at the bid for the 300 puts and compare it to the dividend, right? Do I need to worry about this on the ex-div date or the payout date? A lot of questions here. Thank you for your fantastic podcasts. P.S. I still miss the OO show on... Oh, yeah, he means the Options Oddity show we used to do over there on Thinkorswim back in the day. It was an exclusive show just for the clients of TOS who were hanging out in the swim lessons room. We used to beam it in live. I agree with you, Brian. That was a fun show. Maybe we'll have to bring it back one of these days. There's so many mergers flying hot and heavy in the brokerage space right now. It's kind of hard to start new shows up, but there is a demand for that. Maybe we'll look into bringing that back. But back to your question. Okay, so you got 300, 305 call spreads in SPY. I think you sent this in a few weeks ago, so these are looking pretty good. Better than they were when you put them on out there, I'm sure. One's in June, one's in Sep, so you got some upside flyers here. And now you're worried that if they do go in the money, or because you don't get the dividend for the 300 call, but the 305 call you're short, well, you will be on the hook for paying for that. So maybe let's start there. Maybe, Luke, you're our guest. We'll start with you again. Do you have some thoughts on him? He has this spread. He's worried about if he's going to be on the hook for the dividend. And also he has some questions about the basic math that you do when you want to compare to whether a call is going to be early exercised by looking at the put and comparing it to the dividend. So why don't you walk Brian and our listeners through that as well, sir?
Yeah, I mean, I've got a quick answer. I would close out those trades, first of all. Before I would get into the puts, and there's something called vent risk, where you have some risk. Let's talk about a nuclear reactor. You vent out some of that air, but then that creates other risk. So that's venting risk, if you want to put it that way. I don't think you should be looking at the puts. If you put these things on and they're higher, I would probably take them off, right? It's difficult to say when somebody will or will not exercise because the exercise is done, as we used to say, on a wheel. So just because somebody exercises it and you're short options doesn't necessarily mean that your particular option will be exercised. So you never know if that's going to happen. Most likely, if it's an exercisable option, everybody who's smart enough does exercise it, but it doesn't happen all the time. So before looking at the rest of the puts and the rest of that, just close out the positions and then reload. And then also maybe make your strikes a little wider. Instead of at 300, 305, maybe look at a 295, 315. Try to get a little juice. Try to get a little bit more of a spread in some of the stuff you're doing. But that's the way I would do it.
Yeah, I can get on board with all of that. Tight spreads like that look attractive when you put them on because, it doesn't cost you a lot, but you're not getting a lot of bang for your buck, as Luke outlined there. You got to give yourself a little bit of room to run to make that spread work out. That said, those spreads are probably looking pretty good, as I mentioned right now, so I'd be okay with you took those off as well. These are almost kind of two separate questions here. So maybe, Dan, if you have thoughts on what he should do with the spreads or not, have at it. But also, maybe let's dive into the second part of the question as well, which is kind of similar but kind of unrelated as well, which is what do you need to do, maybe not so much in this scenario, but in general in a scenario to analyze whether your call is going to get assigned on you early by looking at the put versus the dividend, sir?
Yeah, well, I mean, a couple of things. One is, I mean, if you've got, and Mark, we should probably list some disclaimers somewhere that explains to people that traders have really short attention spans, and when there's like a whole paragraph of questions, like, I don't know, I just can't remember what the hell we're saying.
They are lengthy questions. I like our listeners, though. They're very detailed.
Yeah. But, that being said, if you like I have two thoughts here, and I think I'm answering a different question than you asked, but if you've got a vertical spread that's so far in the money that it might be an exercise in this scenario, then like you won, game over. Presuming it's a debit spread. Like if there's no time value left, which would be basically the only way you're getting, it's not 100% true. But if there's no time value left, like you're probably at your maximum profit. Holding it just gives you the opportunity to lose that maximum profit that you got. So don't do that. As far as the equation for calculating whether you should exercise or whether you're likely to get assigned, that's another one of those where, like, if I had a visual aid, it'd be great to show somebody. But I go over that in my book. I've got a Trading Option Greeks has a whole chapter on dividends, and we talk about dividend plays in there. So if any of you have that book, read it. It's in that chapter, and I spent a lot of time going over the example pretty thoroughly.
There you go. Pick up Dan's book out here. But yeah, I think we all agree, Brian, these spreads are looking pretty good. You probably take them off. I think Luke's suggestion to do a little bit wider next time, give yourself a little bit more room to run on the spread itself, is not a bad one. And in general, if you're looking at calls and you're wondering, hey, is someone going to have an incentive to exercise these to try to capture the dividend? Remember, you're exercising the call, you're effectively going to sell out that put, right? So you're looking at what the put price is on that strike. And so if the dividend they're going to capture is going to be greater, then they want to capture that dividend. So they're going to do that all day long. So that's a very quick example. Check out Dan's book, or there's a lot of places you can go. Call up Dan directly over there, a market taker. He'll walk you through the example. These are kind of somewhat unrelated topics kind of lumped together here in one question. I don't want to spend too much time on this because I want to make sure we squeeze a few more of you, and you guys are really overwhelming us with questions and comments. Rashidi Bukta commented on our last show, talking time spreads, short puts. He said it said good. So I guess he liked it. I guess Rashidi liked it. Let's keep rolling here. Yeah, this is another comment from our last show, Dan. Let's see. This comes from Nails. Nails says, on Options Bootcamp episode 82. So very specific. I like it. Dan Passarelli suggested it was a good time to trade time spreads. Why? What unique characteristics make this trade profitable now? Also, how is it best to trade time spreads as a unit or taking off individual legs? For example, if it's a long call time spread, should I let the short leg expire worthless, then keep the call on at a reduced rate, or close them both out together when the initial leg is about to expire? Thanks, Nails. Well, Nails, good question. Yeah, we were talking about that. Dan, you have to put your Wayback Machine hat on now. Go back a few weeks to a month when we were talking about this on that first return episode back there on episode 82. But I recall at the time you were suggesting it was a good environment for long time spreads. Obviously, things have mitigated a little bit. So if your viewpoint has changed on that, let us know. And then B, I think the second part of the question is also kind of interesting, the execution dynamics of it, because he's right. The time spread is 2 legs. It's usually going to be, let's see, 1 month out and then selling the front month, or 2 months out, that kind of thing. 2 months out, selling the front month, or maybe 1 month, selling a weekly, something along those lines out there. So that leaves the question of one's going to expire before the other. So what do you do with the whole trade when one of them expires? So a couple of the questions there, Mr. Passarelli, have at it in any order you feel like.
Let's see here. Episode 82. I remember it fondly. Yeah. So as far as what makes for a good time spread, it's when we have a favorable term structure of volatility or a time skew. So basically what that means is, like conceptually, when it comes to any trading, we always want to buy low and sell high, right? So that's what we want to do with the time spread. With the option we're buying, we want it to be underpriced based on implied volatility. And with the one we're selling, we want it to be overpriced based on implied volatility, or at least have that relationship. And a lot of times what we're looking for is the short options implied volatility to come down so we can make a little bit of money on vega. So there's the answer to that part. The answer to the other part, I'm doing a great job remembering all this. Oh my God, I can't believe it. The other part, no, you don't leg out of it. It's really important with time spreads to look at it as a spread. You put it on as one single transaction and you take it off as one single transaction. I mean, that being said, you can roll, like, if you're buying like the May 29th and selling the May 8th, if the May 8th one ends up working out, like on expiration day, you can buy that one back for, pennies of time premium and sell the May 15th to keep it going. But you never want to leave just one leg on.
Luke, same question for you, sir. What are your thoughts on the optimal setup for time spreads? And also the second part of that question as well. Do you like taking your time spreads off one leg at a time or doing it as a unit, as Dan was talking about?
Well, second part of the question, if you take a leg off of a time spread, it's not a time spread anymore. You've got some other trade on. So, and that's fine. You can do that. You can try to leg into something else, but now you got a totally different risk profile on. So look at it that way. And for me, a good time to do a time spread is, and this has happened over the last few weeks, is when the back month, as Dan was saying, we call it in the business, the back month vol is really getting jacked up. So when vol goes up, the price of options go up. So it makes it easier for you to buy a front month, let's say June, and sell December or January at an inflated price. And I sometimes use this for call spreads. When I want to own a call, when I want to own the stock, and then I want to sell some calls against it, I'll start out with a call spread. I'll buy the front month high delta call. I hope the stock keeps going up. I then get exercised on the stock, and then I've sold the back month, the D's or the January, and now I've got a buy right on. So I always have a plan for that, and then depending on how much it moves up, sometimes I'll get out of it. But the time to be looking at time spreads is the back month vol kind of jacked up? And by the way, before you do that, you should always check to see when earnings are, when dividends are, and what's going on in the stock. Because if you're going to do, for example, June and SEP, you just might find out that SEP is an earnings month, and that's why the vol is jacked up. And if you want to sell that, you can, but you got to know that volatility is usually kind of jacked up during earnings month. After earnings come out, it kind of levels out usually. So be cognizant of that.
There's enough questions here about what we talked about with time spreads. Make me think that maybe this is a worthy topic for a future episode. So maybe a time spread refresher is coming your way, listeners, soon. So stay tuned for that, for everyone out there who has questions about time spreads. We're running up against it. We'll see if we can squeeze in a few more of you guys. Maybe we'll go a little bit long, listeners, because we like you guys. That's how charitable we are here. Another feedback from a recent episode, Dan. This comes from James Bowman. And let's see. James says, this is about a conversation. I think this is in response to another listener question we had back a few episodes ago when someone asked us what mattered the most when trading weekly options. Is it gamma or vega? We had an interesting conversation. I believe Tony from Options Play was on with us on that episode as well. And it came down a couple of different ways. He first mentioned that kind of gamma and vega and theta are really two different sides of the same coin. You can't really have that conversation about one without having it about the other. So this person was missing the point about theta, which seems to be what a lot of people are coming to the weeklies for. They're trying to harvest that theta and get as much of it as they can. Also, saying vega in the weeklies is kind of a bit of a misnomer because there's not a heck of a lot of vega in those. You got to really go out to get a lot more vega out there. So those are kind of some of our takeaways out there. I believe, Dan, you were, as usual, very political in your answer. I don't think you gave an answer. So let's see. James says, depends on if you're in a spread or not, but the answer to him is probably vega. Well, Dan, you wrote the book on trading options Greeks. We have to say to James here, who thinks vega is the most important Greek when trading weekly options, sir?
Well, the thing is when options get really short term, the Greeks start to matter a little bit less. I mean, if there's 5 days to expiration, they still matter, but like on expiration day, like holy moly, on expiration day, it's either stock or it's not, or it expires, the option. So, I mean, that being said, if you look on paper, like gamma and theta get a lot bigger for near the monies as expiration approaches. Vega gets a lot smaller. So, I mean, on paper, I would kind of say Vega's less important and gamma and theta are more important. But, that's kind of notwithstanding. If we're really close to expiration, none of them matter.
The man who wrote the book on the Greeks saying the Greeks don't matter. Interesting. But I see where you're coming from. That, of course, harkens back to the old days on the floor of the SIBO and others when you kind of just put your sheets or your handheld away on Expiration Friday. What a dated concept that is now, Expiration Friday, because your gamma was exploding, your theta was exploding, and your model really couldn't handle it. So there is something to be said for that as well. Some of the Greeks get a little bit haywire as you're getting close to expiration there. Who was it? James. But an interesting point. I'm not sure if I'm down with the Vega side. Doesn't sound like Dan is either. But hey, this show's a dialogue. We're open to your interpretation as to why that is. Not a heck of a lot of Vega in those, but maybe you have some thoughts about why you think that is. Though, speaking of thoughts, that music means we're coming up against it. Let's end it with a little bit of quick love here. This comes from, and a question as well. It comes from Baiju Thomas. I think he's out of London. He's written it before as well. He says, hey, Mark. Well, hello, Baiju. He says, I've been listening to the podcast for over a year now on Spotify and YouTube. Thanks for keeping them coming. Well, you're welcome. He says, my question is, have you ever considered video streaming your podcast? I've seen you in some recent shows like Famous Days, Vic shows, and that video was great. Or if you are able to show your presentations on screens as you scroll through the numbers, also could be great for me to keep up to so many stats you discuss. Thanks, Baiju. Well, yeah, Baiju, we have explored that a little bit. I will say right now, it seems like a growing number of you are enjoying getting our programs via YouTube. We do have a YouTube channel. It's all available there. We'll tweet it out. Just search for Options Insider on the old YouTubes. All of our content is available there. So if you want it in that format, it is available for you. It's got a nice little static image of the show art there, so you get a little bit of visual component too. But it is still pretty much the core podcast experience you guys love out there. In terms of upping that with some, screenshots and things, we have talked about that. Some of the logistics of that, of getting everyone out there to have a good video experience and being able to beam in reliably. You've seen how challenging it is to get people to be able to beam in audio reliably. So video is another handle, let alone having producers switch the video feeds and everything along those lines. Showing the screens might be a little bit more doable. We have thought about that. I don't want to do something just static like, hey, an old Imus in the morning, video on me as I'm talking into a microphone. I don't know how compelling that is, but we are exploring some ideas like that. Baiju and everyone else who's written in saying you're enjoying the YouTube. In the meantime, it is available on YouTube, and we'll look at exploring some ways to amp up that with some compelling new takes on video content for you guys. But for now, everything's available over there on YouTube. Subscribe. A growing number of you are. It never was our intended outlet. It was always an ancillary one. Our distributor just puts it out there. But you guys like it, so we'll keep putting it out there over there on the old YouTubes. But unfortunately, that music means we've come to the end. I want to thank everybody who wrote in with questions. We'll get to more on future episodes. You guys are deluging us. We're trying to keep up with the flood as often as we can. But Luke, as our guest, I will give you pride of place, sir. If folks are intrigued at what you got going on over there at Equity Armor, maybe they want to learn more, where should they go? What should they do, sir?
Thanks, Mark. They should just go to our website, equityarmorinvestments.com. They can check out our mutual fund. They can check out some of our other strategies. They can leave a message, either phone or email, and we'll get back to them as soon as we can.
There you go. Equity Armor. Check it out, listeners, to learn more. And Mr. P, if folks are intrigued, they want to reach out to the black-hatted one. Maybe they want to know what you have up your sleeve for future courses and seminars and things. Where should they go? What should they do? And if you have a little tease you want to leave us with, sir, have at it.
One thing I've been doing a lot lately is producing some new YouTube videos that have some pretty timely market information. So I'd love to be able to share that resource with you. Just go to youtube.com/market taker mentoring, all one word, 2 T's in a row.
Well, at least we know Baiju will like it, right? He's liking the YouTube content. So Baiju and everyone else out there who's loving the YouTube, head on over to Dan's Market Taker on the old YouTubes. In between episodes of this show, you can get some updates on some timely content from Dan and his crew over there as well. And on behalf of Dan and Luke and our friends over there in NASDAQ land, and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, for sending in such great questions, for listening live, for all the other fun stuff that you guys do. Keep it coming. We're going to try to keep the content coming for you these days because you know you guys need it now more than ever. So we're cranking it out as fast as we can. And we'll see you back here next time for more Options Bootcamp.
Options Bootcamp is brought to you by NASDAQ. From its inception, NASDAQ has been an innovator and agent of change in the financial markets. It's in our DNA. From the development of electronic trading to our drive to bring enhanced functionality and world-leading technology to our suite of 6 options exchanges, we exemplify customer focus, consistent technology, and streamlined solutions. NASDAQ. Tech forward. Leading the U.S. options market and continually rewriting tomorrow. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.